first amendment relates to chapter 1, the preliminary chapter, and the amendment is relevant to a small company. Now you're aware that small company is defined under section 2 clause 85 as small company means a company other than a public company. So can I say that the benefit of a small company is available to a private company whose paid up capital does not exceed rupees 50 lakh or a higher limit as may be prescribed, which should not be more than 10 crore rupees, and so it is a dual requirement. The turnover as per the latest profit and loss account does not exceed rupees 2 crore or a higher limit as may be prescribed, which should not be more than 100. Now, earlier, the limits which were prescribed were 2 crore and 20 crore. That limit has now been increased to 4 crore and 40 crore. So there was never an amendment in the definition. The amendment was always in the rules, that is a company specification of definition detailed rules 2014. In rule 2, they had mentioned that companies having paid up capital of 2 crores, turnover of 20 crores will be considered as a small company. Now that limit has been increased to 4 crore and 40 crore. Why have I written the definition in this manner, and why are we discussing it? See, what happens is, normally when the question is asked in the exam, students are still not clear as to how they are supposed to write the definition. Should they make the change here itself? Okay, should they change this to 50 lakhs and 2 crores? Should they write the new limits over here itself, or should they write it separately? I get so many queries where students ask me, ma'am, how is the definition to be written in the exam? So students, please note that there is no change in the definition. The changes were made in the rules. See, whenever you see the word prescribed, it means that the parliament which had enacted the act, they were not ready with this prescribed limit. They said that for the time being, the companies having paid up capital of less than 50 lakhs or turnover of less than 2 crores will be considered as a small company. But later on, when we want to bring more and more companies in the ambit of a small company, when we want more and more companies to get the privilege of a small company, yes, we have given the central government the right to prescribe that higher number through the rules. See, rules are always prescribed by the central government. Section 469 of the Companies Act has given the central government the power to prescribe these rules for better administration of the act. So the central government later on increased the number to 2 crore and 20 crore. But now they want to bring more and more companies. They want more and more private companies to get the privilege of a small company. That is why the limit has been further increased to 4 crore and 40 crore. It can still be increased because the maximum allowed is 10 crore and 100 crore. So yes, later on also you can expect amendments in this rule. So how are you supposed to write in the exam? The basic question still remains unanswered. So this is the definition, and you will write it as it is, with paid up capital as 50 crores, turnover as 2 crores. Okay. Later on, you will leave a line and write what amount has been prescribed. Why am I being so specific? Because presentation is very important in exam. Okay, if you want the examiner to give you good marks, you need proper paper presentation. So you will leave a line and you will write what amount has been prescribed. And then you will write the exact words as per the company's specification of definition detail rules 2014 for the purpose of subclause 1 and 2 of clause 85 of section 2. See how they are flowing. The paid up capital and turnover shall not exceed 4 crore and 40 crore respectively. Then you will write the exceptions that this section will not apply to holding subsidiary company, non-profit organization or government or a body corporate governed by the special act. This will form part of your provisions. Okay, that is how you will start the answer. Only after you write this, then you will start writing the facts of the case, analysis and conclusion. Another question which students ask me and they get confused. What limit should be considered to decide whether the company is a small company or not? See, basic data will be given to you in the question. Then after reading that data, you will have to decide whether the company can avail the status of a small company or not. To check whether the company will get the status of a small company or not, you will check the limits as 4 crore and 40 crore. So I hope this is clear to you that the definition will remain as it is. But to check whether the company is a small company or not, you will consider the paid up capital and the turnover as 4 crore and 40 crore. Alright students, so this is a very small change but a very important change in the definition of a small company. If you see the module, they have just mentioned that for 2 crore and 20 crore, you will now write 4 crore and 40 crore. Okay, so this is the first amendment. Then the second amendment is in the chapter Incorporation of Company and Matters Incidental thereto. If I wish to give you some background as to what we are discussing. Section 13, okay, Section 13 covers provisions relating to voluntary name change, okay. And Section 16 contains provisions relating to compulsory name change. All right. So Section 13, it discusses provisions relating to voluntary name change, whereas Section 16 contains provisions for compulsory name change. Now let us discuss something about compulsory name change. If the central government, now the power has been delegated by the central government, the power is delegated to regional director. Okay, I'm writing it over here. You can copy it. So compulsory name change, central government, okay, if the central government is of the opinion that the name of the company either resembles or is identical to the name of an existing company, it resembles or is identical to the name of an existing company, or if it feels that the name resembles the registered trademark, okay, it resembles the registered trademark, then in that case the central government will pass a direction and you need to alter the name within 3 months of receiving the direction by just passing an ordinary resolution. Now in this case, they had made certain changes. Earlier the time limit was 6 months, so you had the time limit of 6 months to pass an ordinary resolution to alter the name of the company. But then they changed that to 3 months. Now a change was made, an amendment was made in this, although this is an amendment which was there in November 22 attempt also. But the amendment was made in the module in the first part, that is, if it resembles the name of an existing company, then you need to alter the name within 3 months by passing just an ordinary resolution. But the module did not amend this part, okay. In case the name is identical to the name of a registered trademark owner, then yes, in the module they have still mentioned 6 months. Now you need to cancel that out and write 3 months. So now in both these cases, once you receive the order from the regional director, you need to alter the name of the company within 3 months from the date of that direction by passing an ordinary resolution. So to bring it at par, they have now made the change. The old provisions which you will find in the module are mentioned over here. Okay, so this is the provision, and in this, if you are referring the module, you will make the change. On an application by a registered proprietor of a trademark, that the name is identical with, I'm not explaining the provision, it's an old amendment, you are already aware of it. I just want you to be aware that this is the amendment, and if you are studying from the module, you may find 6 months. You just have to change this 6 months to 3 months now. All right, so this is the first amendment. Let us go through. In subsection 1, clause B, for the period 6 months, you need to substitute that with 3 months. So let's say for example, okay, let's say for example that Tupperware is a registered trademark of a company. Now we found that company A is using the registered trademark Tupperware in its name. So Tupperware will approach this company and ask them to change the name. If company A voluntarily alters the name, there is no problem at all, there is no issue. But what if company A fails or refuses to change its name? Then Tupperware will make an application to the central government, and the central government will issue a direction asking company A to alter the name. As soon as company A receives the direction from the central government, it must within 3 months of the direction change the name by passing an ordinary resolution. So this is a compulsory name change. You have to do it after receiving the direction from the central government. Now, what if the name of my company resembles the name of an existing company, or the registered trademark has made an application to the central government? So central government will pass a direction asking the company to change the name. Okay, in both these situations, the company that has received the direction must compulsorily alter the name. What if the company refuses to alter the name even after receiving the direction of the central government? So central government says, all right, if you're not interested in altering the name, we will give you a new name and you will have to adopt that name. ROC will immediately update the register of companies, issue a new certificate of incorporation, and let me tell you the name that they will allot. Okay, so if the company, this is a newly added provision. Students, please note that in your module, you will find the penalty provisions. Okay, so if the company defaults, the company will be liable to fine and the officer. You have to cancel this out. Okay, now they have substituted this penalty with the above subsection. Okay, see this. If the company is in default in complying with any direction given under subsection 1, what is given in subsection 1? What I already explained, that if the central government feels, it is of the opinion that the name is identical with the name of an existing company, or you are using the name of a registered trademark owner. So if you have defaulted in complying the provisions of subsection 1, the central government will allot a new name. And what is the new name that it will allot? The name of the company will begin with, I'll write it over here, ORNDC. Okay, what does it mean? Order of Regional Director not complied. Okay, so this is order of regional director. Why regional director? Because the authority in this particular section 16 has been delegated to the regional director. So ORNDC, order of regional director not complied. This will be followed by the year of direction, the year in which the central government issued the direction, followed by the serial number. Okay, followed by serial number and corporate identity number of the company. So in this case, this alphanumeric number will become the name of the company. Okay, now I don't want this name. All right, no issues. You can voluntarily change the name by following the provisions given under section 13. So later you can voluntarily change the name of the company by following the provisions given under section 13. So this is like a compulsory change that you are asking, because see, penalty etc will not impose the company into changing the name. But yes, what if the ROC changes the name in the register, issues a new certificate of registration, and this kind of a name is given to the company, they will then voluntarily change the name of the company. So this is a very good move by the central government. So in this case, you have to just delete or remove this penalty provision, and instead of that you need to substitute it with this. All right, so this is the second amendment. Let us proceed. The third is a very interesting amendment. There is an addition. It's not an amendment as such. These are additions made. Now this amendment relates to section 42, private placement. So private placement is covered in section 42, read with rule 14. Now what is private placement and what exactly happens in private placement? See, private placement is like a specific offer. It is given to a specific person or a group of persons, and it can be accepted by them only. Okay, like Shark Tank season 2, season 1, yes, it is going on, you must have seen that. So you go to Shark Tank and you give the offer to a specific person or a group of persons, and that kind of offer is known as private placement. It can be accepted only by the person to whom it is made. Okay, so In case of private placement, the company will give a private placement offer come application, and it is given to a specific person and it can be accepted by that person only. Now let's say, for example, you have given this private placement offer to a national, or you have given to a body corporate, of a country sharing land borders with India. Okay, so the company, this is a company which is incorporated in India. It is giving a private placement offer. Okay, this is private placement. Again, private placement. A company is offering securities under private placement to a national or a body corporate. This is incorporated in country sharing land borders with India. Are you getting the flow? So I am a company incorporated in India. I am offering shares through private placement to either a national of a country sharing land border with India, or I am offering shares through private placement to a body corporate incorporated in a country sharing land borders with India. Now, which are the countries which are included over here? So you have China, Pakistan, Afghanistan, Bhutan, Nepal, Bangladesh, Myanmar. These are countries with whom we are sharing land borders. Basically, this provision was introduced to stop investments from China, because if you notice, students, out of the 490 foreign citizens registered as directors in India, 30% are Chinese nationals. So we wanted to improve security and we wanted to keep a check on the Chinese influence and also the influence of these neighboring countries in India, but basically China. So we couldn't just target one country, right? So we said that if you are accepting, if you are offering securities to any citizen, any national or a body corporate sharing of a country sharing land border with India, then in that case you will have to first obtain the approval of the central government under the FEMA rules. So this was basically introduced to keep a check on the Chinese influence in India and also the influence of other neighboring countries in India. So we want to keep a check on how much of the shares are offered to them, because they should not have a controlling interest. Okay, so basically it was to keep a check on the Chinese influence. Let us go through the provisions, and in that I will also explain the concept further. Provided that, so this was introduced as a proviso, no offer or invitation of any securities under this rule shall be made to a body corporate incorporated in a country which shares land borders with India. So this is how you will read the sentence. I repeat, no offer or invitation under this rule shall be made to a body corporate incorporated in a country which shares land borders with India. Now let us read the second part. No offer or invitation will be made to a national of a country which shares land borders with India. Did you understand how to read the words? So you will not make any offer or invitation to a body corporate in a country which shares land borders with India. You shall not make invitation of securities to a national sharing land borders with India. So this is how we have bifurcated into two parts over here, national and body corporate of a country sharing land borders with India, unless such body corporate. So this is the next part. This is how you will learn the definition. How you will learn the proviso. Unless such body corporate or national, as the case may be, have obtained government approval under foreign exchange management rules. So whenever money is brought into India or it goes outside India, FEMA rules apply. So basically here you need the approval of the central government, that is the RBI, before you want to make an offer to any body corporate or a national of the country sharing land borders with India. You will also attach the same with the private placement offer come application letter. So when we receive that filled application letter or the offer letter, along with that you will also attach the clearance from the central government. That approval, that security clearance from the central government will be attached along with that form. The same attachments are also required in case of DIR2. Do you remember form DIR2? This is the form which is filled to act as a director. So it is consent to act as a director. So along with DIR2, you will also attach a security clearance from the Ministry of Home Affairs, Government of India, if you are a national of a country sharing land borders with India. So the same logic, the same repercussions apply to form DIR2 also. Okay, so there are certain amendments made in DIR2. INC 9 also, there are certain amendments in the declarations, etc. But they have not mentioned in the module. However, that was discussed in the recorded lectures that you have. So over here, who needs to obtain this government approval? Who needs to approach to comply with this compliance requirement? Okay. Now the national or the body corporate. The national or the body corporate wishing to invest in the shares or securities in India, they will have to obtain the necessary approval. So read the words carefully. Unless such body corporate or national has obtained the government approval. So they will have to approach the government, obtain the approval, and only then we will allow them to invest in the securities under private placement. I hope this concept is clear. Yes, now let us go through the next amendment, which is in chapter acceptance of deposits by companies. Now this is just a very small addition made over here. Okay, so whatever I have highlighted is just to be inserted. It's not important for exam. Now every company accepting deposits from the public has to file a return before 30th June every year in form DPT3, and this form will also be audited by the auditor. Now, auditor has to just give a small declaration that I have gone through the form and everything is correct to the best of my knowledge. The provisions which they have mentioned over here, students, the amendment which they have given here, the format in which they have given is very confusing to understand. So what I have done is, over here, I have mentioned the exact sentence. You will find this in my notes also. So this will make it very clear as to where the addition and how the addition is to be made. Let's read the sentence. So whatever I have highlighted is to be added as an amendment. Every company other than a government company shall on or before 30th June of every year file with the registrar a return in form DPT3 containing information as at 31st March every year, duly audited by the auditor. So that is what we already discussed. This is to be added, and a declaration to that effect shall be submitted by the auditor in form DPT3. So in that form, he will submit a declaration that I have gone through the entire form. The information is correct to the best of my knowledge, and that declaration will be given in form DPT3. So this is just an addition which is to be made by it. Okay. Now, so just an addition, you can either copy the entire sentence so that it is easy for you to understand, or you can just write in the module the additions that they have made. Okay, so this is the addition. The next amendment is in the chapter registration of charges. Now, you know that every charge has to be registered. Yes or no? Company will have to register every charge. So I'll just write it over here because the entire explanation is based on that sentence. Every charge must be registered with ROC. So we fill form CHG1 for registration of charge. Every charge has to be registered. However, what if? Now, before that, I don't think we need to discuss what is the meaning of charge. What is charge? Asset given as security against loan. So if you are taking loan and you're giving your asset as security, it means a charge is created and every charge has to be registered. But what if? Okay, what if a banking company, let's say ICICI Bank, okay, a banking company has given assets as security to RBI and obtained loan against this security. So banking company has given assets as security to RBI and obtained loan against it. Now, if you're giving asset as security, it means you're creating a charge. Yes. So this is nothing but a charge, and we just discussed that every charge must be registered. But here an exception has been made. Nothing contained in this rule shall apply to a charge required to be created or modified by a banking company under section 77 in favor of RBI. So if ICICI Bank, let's say for example, a banking company has created a charge in favor of ICICI, in favor of RBI, then that charge need not be registered. Okay. So let me write over here, this charge need not be registered. Okay. So this is something which you need to mention over here. And yes, there is also one more amendment. Have you finished writing this? Because this example is going to help you to understand the amendment. Okay. Then there is a small addition. Okay. Signing of charge e-forms by, yes, we need to highlight the authorities that need to sign those e-forms. Let's highlight. So this is just an addition made as far as the signing of forms is concerned. Okay, again, not very important for exam. Signing of charge e-forms by insolvency resolution professional. We will write short forms over here. So IRP or resolution professional or liquidator for companies. Now this is a CA final concept. If your company is being liquidated under the Insolvency and Bankruptcy Code 2016, okay, your company is being liquidated under the Insolvency and Bankruptcy Code 2016, then what happens is, where should I write? Okay, now what happens in this case, the board of directors, we feel that they are no longer competent to control or manage the company, because if the company is going into liquidation, it may be somebody's fault. No, it is because it may be wrong management. So in this case, the board of directors, they have to part with their control, and this control is given to the insolvency resolution professional or the resolution professional or liquidator. Okay, it goes into their hands. Now these persons are having the control of the company. If you're having control of the company, then in that case all the documents will also be signed by these persons. So law says that the documents which are creating charge or which are modifying the charge, those documents will also be signed by these professionals. Now if the company which is going into liquidation has managed to, okay, it has managed to give certain assets as security, okay, give certain assets as security and obtain loan against it, which is very unnatural, I would say. Nobody would want to give loan to such a company. Okay, but yes, maybe you want to revive that company in some manner. So if the company has in some manner obtained loan against the security of asset, it means a charge is created. Yes. Now, if a charge is created, somebody has to sign the form. Somebody has to sign CHG1. So who will sign? Now, in this case, these e-forms will be signed by insolvency resolution professional or resolution professional or liquidator under resolution or liquidation. So you need not remember everything as it is. You just need to remember that in case these companies have obtained loan and given their asset as security, who will sign the required e-form. Okay, now they have mentioned form CHG1. Now CHG1 is an application for registration of charge, which is or maybe even a modification of charge. CHG4, yes, CHG4 is particulars for satisfaction of charge. CHG8, now these are various forms which we have already studied earlier. So this is an application to the central government for extension of the time limit for registration of particulars of creation of charge or modification of the charge. CHG9, this is an application for the creation or registration of or modification of charge with respect to debentures. So whatever e-forms that you are filing with the ROC, it has to be signed by these persons. So that is the only amendment which I don't think is important for exam. The next amendment is in management and administration, and this amendment was already covered in the November 22 attempt. Yes, it is an old amendment. There is no new information that you will study here. It is already included in our notes also. Section 94. Okay, section 94 allows members, debenture holders and other security holders to take extracts from the registers or returns, and even a copy is made available on request. So section 94 allows the members, debenture holders and other security holders to take extracts from registers or returns and even copies. Okay, even a copy can be made available on request. Now let's say, for example, that a member has approached the company to take extracts from the register of members. So in that case, the entire register will be exposed. The personal information, the confidential information, the private information of these members will also be made available. So in order to safeguard privacy, okay, so to protect the privacy or to protect certain confidential information of the members, we have decided that the address or the registered address in case of a body corporate, so the residential address or registered address in case of a body corporate, the email ID, the unique identification number, PAN number, these details will not be shared with anyone who has come to obtain these extracts or copies. So this is just to prevent the or to protect the privacy of members. So these four informations will not be made available. The next amendment relates to declaration and payment of dividend. It is not at all important for exam. This amendment, however, relates to IEPF, that is Investor Education and Protection Fund. Now there are certain specific amounts which are credited, and there is a specific utilization of this fund. Okay, there is a specific utilization of this fund. Now this amendment which is added relates to section 90, that is significant beneficial owner, SBO. Now in case the SBO is not providing the necessary details to the company, then NCLT can pass an order and suspend the shares of the company. These shares will then be transferred to IEPF. So this is just an addition. This is just something which can be credited to IEPF. And I don't think this is important for exam. I don't think a question will be based on this part. Okay. So you can ignore this for the time being. Next amendment is in accounts of companies, and there are many amendments from this chapter. The basic amendment relates to corporate social responsibility. Now, I don't think that we need to go through the companies to which CSR apply, section 135. You're already aware of that. Let's quickly go through these amendments. Now, COVID, yes, a lot of expenditure was incurred on research, development, vaccinations due to the COVID pandemic, and this is a disaster actually, which nobody anticipated. Yes, it is not only the expenditure incurred towards healthcare, but it was also a kind of disaster management. In which all the companies they spent a lot of money and they also contributed a lot of money to encourage research and development of vaccination. So what are the expenditures by the company which can be considered as CSR? So these are the expenditures on COVID which can be considered as CSR activity, may be asked as an MCQ or it can be asked as a case-based question. So let us go through the expenditure which will be considered as a CSR activity. So it is further clarified that spending of funds for creating health infrastructure, you can just go through it once, and I think if this is asked in the exam, at least those words will be familiar. So for creating healthcare infrastructure for COVID care, establishment of medical oxygen generation storage plant, manufacturing, supplying of oxygen concentrators, ventilators, cylinders, other medical equipment, such similar activities, they are still eligible for CSR activities under items 1 and 12 of schedule 7, which relate to, what do they relate? That is mentioned over here only in the sentence. It relates to healthcare and disaster management respectively. So this item 1, okay, I'll just write over here, item 1 actually relates to healthcare, which includes preventive healthcare like vaccination, and also disaster management, which is in 12. Okay, so what is mentioned in items 1 and 12, that is given in the sentence itself. So if you're spending on these activities, all right, if you're spending on these activities, you can claim it as a CSR expenditure under item 1 and 12. Item 1 is for healthcare, which includes preventive healthcare, and item 12 is for disaster management. Then again, let us continue reading and highlight. Specified research development projects, contribution to public funded universities, certain organizations engaged in conducting research in science, technology, industry, engineering, medicine, that is also CSR activity. So this is basically donation for certain specific research, or basically to certain organizations which are or contributions to the government oriented or publicly funded research projects. The companies, including the government companies, may undertake activities or projects using the CSR fund either by themselves or in collaboration with other companies. All right. You can do it either on your own or in collaboration with other companies, so that you can spend more. Okay. When 2 or 3 companies come together, you can spend more. Over here, they have mentioned that vaccination, we will highlight this, can be asked as an MCQ. Vaccination for persons other than employees and their families. So expenditure incurred on the general public other than your employees and their families will be considered as an eligible CSR activity under which head? Under same item 1 and 12, which relate to healthcare and natural and disaster management. So it is other than employees and their families. Okay, this is something which is important for exam. So expenditure incurred on vaccination of people other than the employees and their families will be considered as an eligible CSR. So vaccination word is also important for exam. You need to know on what we are spending. Then there was an initiative taken by the government, Har Ghar Tiranga, on Azadi Ka Amrit Mahotsav. Yes, Har Ghar Tiranga, wherein, the government had encouraged us to hoist a flag in our balconies, and there was a proper procedure. There were rules on how you should hoist it, and, for how many days you are supposed to keep it. So, Har Ghar Tiranga, under the Azadi Ka Amrit Mahotsav, wherein companies, if they had spent on mass scale production, supply of national flag, outreach, amplification efforts, encouraging people to participate, so that there is ekta ki bhavna, or you see, when people come together, then they are conducting this activity to encourage people to come together, to stay united. So if you are amplifying this, if you are encouraging people to by giving them flags, by sponsoring flags and encouraging them to hoist in their balconies, so yes, that is also an eligible CSR activity. It promotes patriotism, nationalism in the hearts of the citizens. So I think this was a very good initiative, and it was to promote education relating to culture. Under this head you can claim, and that is item 2. So what is item 2 under which you can claim this as an expenditure? Promotion of education relating to culture and encouraging patriotism in the citizens. So yes, whatever this amount is spent on Har Ghar Tiranga, mass scale production, supply of the national flag, outreach, and to amplify, so that many people participate in that. Whatever expenditure the company has incurred, that is also an eligible CSR. It can be claimed as an eligible CSR activity. This can be asked as a case-based question. I think this can be asked in one of the multiple choice questions. You have a case-based question when 4 to 5 questions are based on a scenario. So in case scenario question, they can ask the expenditure spent on Har Ghar Tiranga, whether that will be considered as an eligible CSR activity or not. The next amendment is, yes, we have AOC 4. Now, every company has to file the financial statements with ROC, and this will be filed in form AOC 4. Okay, so AOC 4, AOC is the form number given for accounts of companies. So AOC 4, these are filing of financial statements with ROC, and they need to be filed within 30 days of AGM. Okay, you need to file AOC 4 within 30 days of annual general meeting. Now, law requires that along with AOC 4, you also need to file CSR 2, which is a report on CSR. Okay, so along with AOC 4, we will also have to file form CSR2 with the registrar. Now what is CSR2? This is a form which is filed for the CSR report. Okay, this is a CSR report that needs to be filed. Now it is to be filed along with AOC for within 30 days of AGM, but in case you have not yet filed, so we are giving you a timeline. Okay, we are giving you a timeline. In case of financial year, now I'm clubbing 2 or 3 amendments which they have mentioned further. In case of financial year 2020-21, okay, if you are filing the AOC for the financial year 2020-21, this CSR 2 is to be filed on or before 30th June 2022. Okay, so this is to be filed separately on or before 30th June 2022. Now, see, it may happen that you have already filed AOC 4, but this form was introduced later and you have already filed AOC 4. From now onwards, you will file AOC 4 plus the CSR 2. But what if you have already filed AOC 4 for the previous year, that is financial year 2020-21? So in that case, you can file CSR 2 separately on or before 30th June 2022. In case of financial year 2021-22, the CSR 2 is to be filed on or before. Here you can also write separately words so that you can remember that. So we can write separately. So CSR 2 will be filed on or before 31st of March 2023. So these are the dates which they have mentioned. These are the timelines, and from this year onwards, from the financial year 2022-23, you will file the financial statements in form AOC 4, and along with that, you will also file the report on CSR in CSR 2, form CSR 2. So that was the amendment. You can write this. Okay, for the other amendments, no students, I have an extract from my textbook because I feel that whatever they have given is very confusing. They have just given the amendments, but it is very confusing for us to know where it is made exactly. So this is an extract from my textbook. Manner of maintaining books in electronic form. So what is mentioned in Rule 3? So Rule 3, it covers, I'll just zoom in a little. Rule 3 covers the manner of maintaining the books in the electronic form. Now, in an age of computers, you cannot expect the companies to maintain the books manually. And also, there are so many transactions which the companies incur on daily basis. It is not possible to maintain manual books. So companies are allowed to maintain books in the electronic form. Now, what is the capacity of a computer? It is hardly into 1 TB, 2 TB, but you keep on adding hard disk, and your RAM should also take in that much of load, no? So most of the data, we try to keep the computers in perfect working condition, and we save all that data on a cloud in servers which are located either in India or outside India. See, whenever you use the cloud servers, you are actually not aware where that data is stored, because you don't know where the servers are located. And nowadays the servers are located underground, under sea, I don't know, wherever they find space, your data will be stored, and whenever you need the data, that will be retrieved. So that is how cloud computing works. Now you don't know where the data is kept, but cloud has become a very important means of storage of records in the electronic form. So wherever you are storing your data, either in servers in India, you have it in your office, or you're using the cloud servers, wherever you are storing the data, it should be accessible in India at all times. It should never happen that, oh, my server is down, or I don't know where the data is stored. I have stored it in some cloud space, but I don't know where that data is. That should not happen. You should be able to access that data whenever required. So it should be available at all times in India. That is the amendment made. See, earlier also the provisions were they must remain accessible in India, but they have added at all times. This has been added. So it must remain accessible in India at all times for future reference. So they're just assuring that you don't just store the data and you forget about it. You should know. See, when you store the data, you will have a password. You need to make a note of the password, because these are all accounts, no? So you need to log in, and then the data will be retrieved. You will see if you're using Microsoft Cloud, that I also use that for storing a lot of data, and or backups, and there is a login, there is a password, you need to know that. So you need to know in which cloud space, under which account I am storing that data, and all that should be retrievable in India at all times. Provided that for the financial year commencing on or after first date of April 2023, earlier it was 2022, but we know it is not possible for companies to implement this, so it has been changed to 2023. This is the amendment which is made. Every company which uses accounting software for maintaining the books of accounts shall use only such accounting software which has the feature of audit trail, edit log is to be maintained. This is an old amendment. Okay, only this is important now, 2023, it has been changed to 23. So whatever accounting software that you are using should have an audit trail, and it should also maintain an edit log for every change. So we just want that audit trail should be maintained, and if somebody is editing, that log should be maintained at who has edited at what time. Okay. Then this is also added daily backups. Earlier it was periodic backups. Daily backup should be kept in servers physically located in India. See, over here there is no requirement of the servers being located in India only. Your server can be located anywhere. You can store your electronic books of accounts anywhere in the world. But backups should be taken in servers which are physically located in India. Okay, so daily backup should be taken in servers located in India. Physically, the servers should be located in India. Server is a place where the information is stored. Okay, it is a space, like your computer has a very small disk space. So these are huge servers. These are huge places where information is stored. That server should be physically located in India. So this is the amendment. So whatever I have highlighted in yellow, that is the amendment. All right. Let us proceed further. The next amendment also relates to CSR. Now, this is inserted, so it means it's an addition. Provided further that the company having any amount in the unspent corporate social responsibility account shall be required to constitute a CSR committee and comply with all the provisions relating to CSR. Now, before we study this, we will have to revise that CSR applies to companies whose net worth is more than or equal to 500 crores. Turnover is more than or equal to 1000 crores. Or your net profit is more than or equal to rupees 5 crores in the immediately preceding financial year. So if any of these criteria are satisfied, CSR will apply to you. Now it is worth noting that I will consider the previous financial year figures to determine whether I need to make spending this year. Okay, so if let's say for example I am in the year 22-23, I will have to consider my position in the previous financial year, that is 2021-22, to decide whether CSR applies or not. So if in the year 2020, I'll highlight 2021-22, if in that financial year my net worth, turnover or net profit, any of these limits are satisfied, then CSR will apply. Okay, and how much do I need to spend on CSR in this year? This year I will have to spend at least 2% of the average net profit of the last 3 years. Okay. So this also helped us to understand that CSR, if applicable in a particular year, you will have to spend for the next 3 years. Okay, because all the criteria, if you read the next provision also, everything revolved around those 3 years. So if I am spending, let's say if CSR applies to me in a particular year, then I will have to continue spending for the next 3 years. So this year plus next 2 years. So for 3 years, I need to incur the CSR expenditure. All right. So this is something which you need to keep in mind, that the CSR will apply on the basis of your limits of the previous financial year. How much is to be spent? 2% of the average net profit during the immediately preceding 3 financial years. So this is my spending. You also need to remember that if the amount to be spent, okay, if your amount to be spent on CSR was less than rupees 50 lakhs, then you were not required to constitute a CSR committee. Yes, do you remember this? So this actually requires you to go back, and there is some background required. The first thing that was required, that if CSR applies to you, you have to spend, and you also need to constitute a CSR committee. But if your spending is less than 50 lakhs, then you need not constitute a CSR committee. However, law has added that irrespective of your spending, if the amount is remaining in unspent corporate social responsibility amount, if you have any amount, there is no limit over here, okay? If you have any amount in the unspent CSR account, then in that case, you need to constitute a CSR committee, all right? I repeat, CSR applies, I'll just move this over here. CSR will apply if you cross these limits. Yes, if you cross these limits, CSR will apply, and you need to constitute a CSR committee. But CSR committee was not required if the amount to be spent on CSR was less than rupees 50 lakhs. In that case, if the CSR committee was not formed, then the functions would be performed by the board. Okay, they would perform the functions. Now, if the amount of spending is less than 50 lakhs, CSR committee was not required. However, they have added this proviso which says that if you have any amount in the unspent CSR account, then you will have to constitute a CSR committee. So let's say that I have 10 lakh rupees in my unspent CSR account, and this year the amount that I need to spend is less than 50 lakhs. So even then, CSR committee needs to be constituted. Okay, so that this has a relevance. If I don't consider this, law simply says that if you have any amount lying in the unspent CSR account, you have to constitute a CSR committee so that they ensure that the amount is properly spent next for the activities that you have undertaken as CSR. Okay, whatever is your CSR area. So if the amount is lying unspent in the CSR account, that committee is required to be formed. All right. Then they have omitted this particular rule. Okay. Now, what was mentioned over there? See, it was mentioned that if the company ceases to be a company covered under subsection 1 of section 135, if these criteria were no longer satisfied, okay, if you were no longer satisfying any of these criteria for 3 consecutive financial years, then you need not constitute a CSR committee and you need not comply with the provisions of this act. CSR spending was not required. But for that, we would see whether the CSR is not applicable for the last 3 financial years. Now they have omitted this. Okay, this is now omitted. What is the impact of this? Now it means that you need to check the limits every year. So if in the immediately preceding financial year you are satisfying any of these criteria, then CSR applies. If in the next year you see that I am not satisfying any of these criteria, then CSR will not apply. In the third year, again check. So this check will now have to be made every year. Earlier, if you were if CSR was not applicable in consecutively 3 financial years, then you were exempt till the time it was applicable. Okay, so till it meets such criteria. So you were given exemption till you satisfied those criteria, but now they have omitted this. It means that these limits will have to be checked every year. All right, that is the implication. Then we have amendments in rule 4 of subrule 1. Okay, now what was the earlier rule? Let me go through that first. The board would ensure that CSR activity would be undertaken either by the company itself or through. See, you need to spend money on CSR. Sometimes the company would have its CSR committee, they would formulate a policy, they would devise a plan on how they will spend this money. Or sometimes it is, we would allow you to collaborate with companies, or you can approach the companies which are registered as section 8 companies, or you are a registered public trust, or you are a registered society and they are registered under section 12A or A and ATG of the Income Tax Act. We could get the CSR spending done through either a section 8 company or a registered public trust or a registered society. So company, if you are very confident, you can do it on your own. Okay, you can do the spending on your own, or you can form a Section 8 company. So we have the Tata group has their Tata Foundation. So they do the spending through Tata Foundation. Even Reliance Foundation, Reliance Group is spending the CSR through Reliance Foundation. So you can either spend the money on your own, but you know what happens that you need to find areas which require this money. Like I need to find whether any particular village is in need of toilets, whether what are the projects. So companies don't have time to do that, so they approach Section 8 company or a registered public trust or a registered society. And it is easier because that is the work which these Section 8 companies and registered public trusts, that is the work which they do. So it is better to get it done through people who are already aware of these projects. All right. So the board will ensure that CSR activity was undertaken either by the company itself or through a company which they may establish as a Section 8 company or a registered public trust, or you are a registered society registered under Section 12A or 80G of the Income Tax Act. This was established either by the company, either singly or together with another company. You may be a company established under Section 8 of the Act, or a registered trust or a registered society now established by the central or the state government. So you can get it done through a Section 8 company or a registered trust or a society which was established by the central or the state government. Or you may be an entity established under the Act of Parliament or state legislature. So the company could get the work done through them. The company could also approach any third party established under Section 8 or a registered public trust or a registered society, and so on. So here, what is the difference? In this case, the company itself is establishing the Section 8 company or a trust. Here you are approaching a third party, okay, some other Section 8 company. Here you yourself are establishing it either singly or together with one company, or maybe you can approach some third person. Okay, so that was what is mentioned. Now, what is the amendment? The amendment is just few additions. I'll highlight what they have amended. They have just added this. Okay, they have just added this. All right. Now, what does it mean? A charitable trust, okay, charitable trust could be established, could be registered under Section 12A or 80G of the Income Tax Act. Okay, so you could be a charitable trust registered under Section 12A or 80G of the Income Tax Act, or you could be registered under Section 1023C. Okay, you could be registered under this and you could claim the exemptions. Now, they have simply added that it is okay if you are a charitable trust exempted under clause 4, 5, 6 or 6A of clause 23C of Section 10. So you may be a charitable trust who is registered under section, or who is exempted under Section 1023C, or you may be a charitable trust which is registered under Section 12A or 80G. You both are allowed to carry on the CSR activities of the company. Okay, so they have just included more charitable trust under the umbrella. That's it. That is the meaning. All right, so in both the cases, they have just included the trust or Section 8 company or a registered society which is also exempted under Section 1023C. So they can also carry on CSR activity. That's the amendment. Then the last amendment is in impact assessment. Now, this is the old provision. I have mentioned it over here. What is the meaning of impact assessment? See, if you are spending a lot of money on CSR, it is your responsibility to ensure that the projects are creating an impact on the society. See, spending is not important, but it is also important to see whether that spending is having an impact on the society. Now, you say that I have planted 1,000 saplings, but have you noticed that cows come to graze in that particular area and they have eaten all your saplings? Then what is the use of spending crores of rupees? So you have to create a barrier. Okay, so you have to create a mesh so that those saplings grow into trees. So if you are spending crores of rupees, just conduct an assessment to see whether that spending is actually creating an impact on the society or not. But not every company was required to conduct an impact assessment. Only the companies whose average CSR obligation of was 10 crores or more in the immediately preceding 3 financial years were required to take impact assessment. That also not of all the projects, of only those projects having outlays of 1 crore or more. So who were eligible or who were required to undertake impact assessment? Only if your CSR obligation for your average CSR obligation in the immediately preceding 3 financial years was more than 10 crores, and only for those projects which have an outlay or spending of 1 crore or more and which have completed at least 1 year before undertaking the impact assessment, because it is not possible to know the impact in just a few months. So you are already aware of this fact. Now, this impact assessment was to be undertaken through an independent agency, unbiased agency. Now, nobody will work for free. Even though they are conducting an impact assessment of a CSR project, they have spendings. So in that case, the company to undertake that impact assessment was incurring expenditure. Now, let's say that the company in a particular year spent 75 lakhs in conducting the impact assessment. Okay. Now, law says that yes, this could also be considered as a CSR expenditure. So let's say if in a particular year you were required to spend 20 crore rupees. So out of 20 crore, we will consider as if you have spent 75 lakhs. Okay, that is a genuine expenditure. We would allow it. But we cannot just allow any amount of expenditure. Otherwise, people will say, I have spent the entire amount on impact assessment. Now I need not spend anything on the project. So there was always a limit on the expenditure that was allowed as a CSR expenditure. So the earlier limit was 5% of the total CSR expenditure for that financial year, or 50 lakhs, whichever is lower. This was the earlier limit. What was the earlier limit? 5% of total CSR expenditure for that financial year, or 50 lakhs, whichever is lower. Now what have they done? This 5% is now changed to 2%, and lower is now changed to higher. Now what is the impact of this? Let's say my expenditure on conducting the impact assessment was 75 lakh rupees. The entire amount is not allowed as an expenditure. What is allowed? Under the earlier provisions, 5%, okay, 5% of the CSR expenditure for that year. Let's say that I need to conduct, my expenditure is 5 crore rupees. Okay, that is the expenditure for that particular year. So 5% of 5 crores comes to 25 lakhs. Compare it with 50 lakhs, whichever is lower. It means only 25 lakhs was considered as already spent on CSR. So out of 5 crores, I could consider only 25 lakhs as actually spent, and the remaining was to be spent for that year. But under the current provisions, under the amendments, 2% of 5 crores. So that comes to 1 crore, 10 lakhs, sorry. So 2% of 5 crores comes to 10 lakhs or 50 lakhs, whichever is higher. My voice. So now you will get 50 lakhs as your eligible expenditure on impact assessment. So yes, it is beneficial. I can get a maximum of 50 lakh rupees, and then out of 5 crore, I will consider 50 lakhs as I've already spent, and the remaining 4.5 lakhs will have to be spent on CSR. Excuse me. So I think with this, we have come to an end of our amendments. Yes, that is the last amendment for the day. So these were all the amendments for May 23 attempt. And I hope all the amendments are clear. If you still have a doubt, you can contact me on the number given in the description box. And fast track lectures for CSR, fast track lectures for May 23. Too much of CSR is happening here. Fast track lectures for May 23 are available on my website. So do visit my website, capreetyagarwal.com. We also have chart book for last minute revision and compiler, which is a compilation of all the past exam questions, study material, RTP, MTP questions with answers in the format, provisions, facts of the case, analysis and conclusion in that format. So do check out all the books and lectures on my website, capreetyagarwal.com. Also, subscribe to this channel for revision lectures, booster lectures, and a lot of content.